Hi believers, this is Amit from Waya, and I'm here to provide a weekly bite on the road ahead in the markets. The Indian market continues its consolidation. For the second week in a row, Nifty delivered positive returns and closed with gains of 0.3%. Key highlights of the week were RBI rate cut and pause in Trump's tariffs that gave market a breather. Bank Nifty too gained by 1.3% for the week, indicating outperformance over Nifty. Interestingly, the ratio chart of Bank Nifty per Nifty 50 is bouncing from long term cycle lows, indicating relative outperformance going ahead. Let's talk about RBI monetary policy. The Reserve Bank of India kicked off its rate cut cycle and delivered its first interest rate cut in 5 years to address the growth slowdown in the Indian economy and provide a much needed boost to urban and rural demand and consumption. The repo rate was slashed by 25 basis points to 6.25% from the high of 6.5%. The move was in sync with market expectation, as after the budget 2025, expectations were high that the RBI would also take measures to boost growth. RBI last reduced the repo rate by 40 bips in May 2020. The governor put forth an optimistic outlook for the Indian economic growth, saying that the country should aspire to achieve a GDP growth rate of 7% while forecasting a growth of 6.7% in the coming fiscal year, that is FY26. The RBI projected real GDP growth for the current year at 6.4%. Hence, 6.7% growth rate for the next year is a good estimate. RBI also expects inflation to come down gradually near its target range of 4% after moving the upper tolerance band in October. Food inflation pressures should see a significant softening due to good kharif production, winter easing in vegetable prices, and a favorable rabi crop prospects. In terms of risk, the governor mentioned that global headwinds continue to impart uncertainty to the outlook. Let's talk about the key beneficiary sectors of this rate cut. We believe that the rate cut could positively impact rate sensitive sectors such as banking, auto, and real estate. RBI complements Budget 2025 announcement of increasing the tax exemption limits by cutting interest rates. This will benefit the middle class by increasing the disposable income. We believe the coordinated effort will go a long way towards stimulating growth and increasing consumer spending. It will also benefit FMCGs and consumer durable sectors. Coming to earnings season analysis, earnings are not coming out so great due to weaker than expected revenue growth, margin pressures, and cautious management outlooks for the coming quarters. As per the reports of leading brokerage, JM Financials, 72% of Nifty 50 companies experience EPS cuts in January. Also, EPS cuts significantly outnumbered upgrades, with 36 Nifty 50 companies witnessing downward revision. The most affected sectors included consumers, banks, metals, and minings. Sectors like industrials, pharmaceuticals, and IT remained relatively immune to EPS cuts in January 2025. We believe recent budget announcement and RBI rate cut shall help in improving earnings in the slowdown impacted sectors. Technically, the index is taking a breather after witnessing breakout from 3 weeks base formation. We believe an ongoing breather would make the market healthy and gradually pave the way to ahead towards 24,000 in coming weeks. The trend is likely to remain positive as long as the index stays about 23,300. In this process, bouts of volatility cannot be ruled out amid state election outcome and inflation print on domestic as well as US front. Meanwhile, Prime Minister Modi's visit to US would be key. Hence, accumulating quality stocks on the dip would be a prudent strategy to adopt. Further, ongoing sell-off by FIIs continues. Stretched valuation on Indian markets, weak quarterly earnings, rising US dollars and bond yields, and fading expectations of rate cuts by the US Fed have been among the key factors driving FIIs away from the Indian market. For the Indian market to stabilize, the FII sell-off needs to recede. That's all for today. Wishing you a profitable week ahead. Thank you.